Hey everyone, welcome back to Corporate Decoder. Today 1606 Corp CBDW just filed an 8K, and I'm seeing something interesting about their real estate deal. Quick note, this is not financial advice, just my take on public filings for educational purposes. They are extending a property purchase and paying extra for it. But the clock is ticking to avoid a deal collapse. Alright, let's dive into what 1606 Corp is up to. This filing is an 8K report, which companies use to announce major events that shareholders should know about. The main thing happening here is an amendment to a deal they made back in March to buy some real estate and other assets in Angelina County, Texas. This amendment, signed on May 27, 2026, is really about pushing back the date when the deal is supposed to be finalized, called the closing date. They originally planned to close on May 22, 2026, but now they are extending that to the 31st of October 2026. The total price for the property, which is a hefty $11,168,864, is not changing. Now, here is where it gets interesting. To get this extension, 1606 Corp has to pay an extra $312,000. This payment is due within one business day of May 27th. This fee is broken down into two parts. First, there is a $75,000 operational offset amount. This part is basically kept by the seller no matter what, unless very specific conditions are met. Then there is $237,000 that is supposed to go towards settling some ongoing legal disputes about property taxes affecting the land. This tax portion will be credited back to 1606 Corp at the closing, meaning it reduces the total purchase price. Remember, they had already put down $250,000 in Earnest money, which is like a deposit, back when they amended the deal in April. That money is already considered fully earned by the seller and is non-refundable. But there is a big condition attached to this whole extension and the tax contribution. 1606 Corp needs the seller to have a written payment plan or a settlement agreement with the tax authorities for the property tax lawsuit by the 12th of June 2026. If that deadline passes without this settlement, the entire deal automatically falls apart, and if that happens, the seller has to return that whole $312,000 extension fee back to 1606 Corp. This filing is signed by Austin Lambrecht, the Chief Executive Officer of 1606 Corp. The report itself is dated the 2nd of June 2026, indicating the company is complying with its reporting obligations. Now, looking at 1606 Corp, from a broader perspective, recent news suggests they are pursuing a high growth strategy. They announced plans to acquire a 51% stake in SimAgro Inc., with an option to increase that to 81%. This acquisition seems focused on power assets that could supply energy to data centers and AI operations. They are also planning to acquire a 55 megawatt power facility and a warehouse that is ready for a data center. This move into energy and data center infrastructure is a significant pivot for a company that might be known in the consumer, defensive, or tobacco sectors. It appears they are aggressively trying to build out a business that taps into the growing demand for reliable power and data storage. This real estate deal in Texas, while it has its own hurdles with the tax litigation and tight deadlines, fits into this larger picture of acquiring physical assets that could support their data center ambitions. The extension fee and the conditions around it show the complexities involved in these types of transactions, especially when there are existing legal issues with the property itself. The risk here is clear. If the tax suit isn't resolved by mid-June, they lose the opportunity to extend the deal. And while they get their extension fee back, it signifies a setback in their acquisition plans. The extended closing date to the 31st of October gives them a significant window, but the 12th of June deadline for the tax settlement is the immediate hurdle. This is essentially a test of whether the seller can navigate the tax litigation successfully. If they fail, the deal collapses and 1606 Corp will have to rethink its strategy for this particular property. Considering the company's other announced acquisitions focused on power and data centers, this real estate purchase is likely a key piece of their infrastructure development. The fact that they are willing to pay a $312,000 extension fee plus risk the Earnest money shows their commitment. However, the strict conditionality around the tax suit resolution is a major point of attention. It highlights that while they are pushing forward with expansion, there are significant external factors like ongoing legal disputes that can derail their plans. It makes you wonder about the due diligence and the potential for unforeseen problems when acquiring properties with unresolved legal issues. What I am actually looking for is how they will manage the integration of SimAgro and the power assets, as that seems to be their primary growth driver. This real estate deal, while important, feels like a supporting act. The risk I am watching is whether the seller can actually resolve the tax issue in time, because if not, it is back to the drawing board for this specific acquisition. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Check out the Discord in the description too.